That is right. We're circling back to it. Coca-Cola. Coca freaking Cola. Obviously reported earnings yesterday. So we're going to get back into that and take a look at what's going on with this. The reactions were a little bit mixed yesterday. We saw it started off positive after the market opened. It was negative. And today, obviously, a little bit of turnaround into the positive. Don't mind my shifting. But yeah, good things happening here. So if you look over the past year, this is a stock that's up 16.5%, which is not that bad for a little bit of Coca-Cola. This is typically a stock that's pretty consistently slow moving, doesn't have too much movement except for obviously when you see the huge dip in March. But if you look over the last 5 years, I mean, again, only a 21% growth in the last 5 years when a lot of companies are showing over 70% growth. So something you need to consider on there. Let's look at these earnings, though. So obviously before we discussed this, see that? I talk with my hands sometimes. But some people need to consider that this quarter is not one that necessarily has a great impact as far as pandemic shutdowns. So a good portion of Coca-Cola's business does come from the restaurant side of it, where they're selling the bag and box, syrup that companies use obviously for either fountain drinks or even just bottles. So that portion was not necessarily shut down in the United States during most of this, but it was in the greater China area at least for a solid month. So you do need to consider that's going to help their comp sales certainly over the next few quarters, but this quarter not necessarily as much. We do see a non-GAAP EPS of 55 cents. It's a beat by 5 cents, and a GAAP EPS of 52 cents beats by 2 cents. So good to see profitability beat for sure. Revenue of $9 billion is up 4.7% year over year, and it's a beat by $370 million. So overall, it's a nice beat for sure. They were not expected to grow revenue. I'm pretty positive, or it was supposed to be a slight growth. So it's good to see that for sure. Organic revenue, again, that they're really focused on that with this company. They think it's the future is organic sales. So organic revenue growth came in at 6% versus a consensus to have flat. The company expects to deliver organic revenue percentage growth of high single digits and to deliver comp EPS percentage growth of high single digits to low double digits. So pretty decent guidance, all things considered, for the next quarter. But I do believe, that was for the full year, I should say. I personally would believe that they should be expecting higher numbers in terms of EPS growth year over year, but that's just me. So Coca-Cola, great organic sales growth as we saw. In Asia Pacific, it was up 18% alone. Again, that's because the greater China area shut down for part of this quarter. Pretty nice to see. Now, one thing they mentioned as well, they do plan to list Coca-Cola Beverages Africa as a publicly traded company and sell a portion of its holding via an IPO. So we'll see what that looks like, and obviously that'll raise some capital for them. We'll see what they do with that capital necessarily. So curious. Let's look at the earnings slides here. See what we have to look at. So gross margin, you see, for the first quarter here came in at 61.1%. That compares to 61.6% the year prior, so down a wee bit. I said wee, that's gross. Operating margin came in at 30.2%. That is against a GAAP operating margin of 27.7% of the year prior, so solid stuff there. Nothing super crazy as far as these dealios. That was it for margin. So they didn't necessarily release any good slides, but we do always have the press release to look at, which is important stuff. Okay, we love looking at that. EPS saw a 19% decline year over year. If you're curious what that number looked like, definitely one to look at. So we see overall. Here they give some updates regarding what's going on with the market. Again, you're going to see some differences, as I mentioned, year over year in terms of price to sales. It's going to be a little bit different. Here's a chart of what we see in the different regions. So overall, reported net revenues, obviously combined, all up 5%. But you see EMEA saw a 6% decline, not in shutdown mode yet. Latin America down 2%, North America up 3%. None of those are in shutdown mode. But Asia Pacific was up 24%. That was in full shutdown mode there, full on shutdown mode. And case volume, similar story. Next quarter, you're going to see a lot higher of percentage growth. So comp sales should be looking pretty decent, all things considered. Similar numbers in operating income in terms of percentage base. North America saw quite a significant growth, though, in EPS line. I'm curious what that lines up to. Probably some sort of purchase of properties is what I'm assuming. So we do also have, they go into each segment again, and most of it's going to just talk about why that is the case for those numbers. There's nothing significant in either of those. Again, most of it's just going to be pandemic related, and so on and so forth. So keep that in mind. We will, you think that you're going to hide that balance sheet for me? The thing about it is, you're not going to. I'm going to scroll all the way up, and I'm going to click on this. And you know what? I'm going to freaking find that balance sheet. And you can't hide it from me, okay? How does that make you feel? That's right. Pull it on up. Pull it on up, you sons of guns. When all else fails, we go to the investor relations page. Some say I might have had this, should have had this pulled up already. And those who said that would be correct. But I think that's the same dealio. But this might include such a thing. I think it shall. But I think I scrolled too far down. I feel like I'm getting disrespected right now. And I think you guys owe me some more respect for that. That's right. Here it is. You thought I wouldn't find it. You say those words again to me. Tell me I won't find it. See what happens. Total current assets coming in at $21.9 billion. It is only a 3-month comparison. That compares to a $19.2 billion number from before. Increase in cash or cash equivalents for the most part. $89.9, really $90 billion in total assets compared to $87.3. So it's definitely some growth there. Again, most of it's because of the current assets. Current liabilities, that line's coming in at 16.4 compared to 14.6, so that's all quite an increase for sure as well, around $2 billion. And total liabilities, or total stockholder equity, though, because you saw a little bit of decrease in other liabilities here. So there's some positive notes here, but total stockholder equity came in at $22.3 billion compared to $21.2 billion. So a growth of around $1 billion in a 3-month period is not bad at all, especially when you consider that this is a company where the EPS line should be seeing a growth over the next year, should be able to even better recover this balance sheet and strengthen it. So I like what I'm seeing out of Coca-Cola, trading at a PE of 32, relatively high, but again, that'll level out. That's based off last year's earnings as well. That PE ratio will level out this year once it normalizes, I should say. So it'll get to be a lot more normal. Probably going to be closer to 25 when all is said and done this year. Probably a little bit less than that, closer to the 20 to 25 range. So keep that in mind for this company. If it stays at a similar price, trading at a market cap of $233 billion. I don't think it's incredibly expensive for the stock, all things considered, as I click on a bunch of stuff. But let me just go back right here. Not all things considered, I don't think it's that crazy, because the company will bring in it'll bring in over $40 billion this year for sure. So it's really trading only around five times that amount. So it's not an overpriced stock by any means. I think this is a good core holding to have if you don't have it already in your portfolio, because it pays a good dividend. So that's why I own it. I hope you enjoyed this and you have a great day.